What is up, you beautiful people? Welcome back to the Built on Bitcoin podcast. We're covering everything going on in the Stacks ecosystem. I'm your host, Jake Blockchain, and today we have Aki Bailo on the podcast. Aki is the co-founder and CEO of DLC.Link, and we cover a ton of interesting topics. DLC stands for Discreet Log Contracts, if you're not familiar. This is a special kind of connection and transaction you can make on Bitcoin main chain. It does require a special wallet to use it, but it allows you to, kind of like how Stacks allows you to stack your stacks and it's just locked in your wallet, but it is being used for stacking. You can claim your Bitcoin yield that way, but it never leaves your wallet technically. You still are in custody of it. DLC allows you to do that with Bitcoin, and you can do different things. Lending services, you can use as collateral for something else. It's a bunch of different interesting use cases. So we talk a ton about that. We talked about his past as a founder. He's a previously exited founder from a company called Muse, which was using AI for content marketing. Super interesting stuff. And yeah, a bunch of topics. We cover all kinds of things. Super, super interesting conversation. So I think you guys are going to like this one. And before we jump in, though, I got to thank my sponsor. And especially if you watch this episode and you are excited by what Aki and his team are building, and maybe you want to get started yourself on building on Bitcoin through Stacks, the best way to do it is to learn Clarity. And the best place to get started is start.stacks.org. It's a resource put together by the Stacks Foundation, and it's the best place, whether you're an absolute beginner and you've never done any kind of coding. They take you through 5 steps from the absolute basics all the way to step 5, where you're kind of a Clarity ninja. You can apply for a grant from the foundation and build something interesting like what Aki and his team are doing. So highly recommend. We need more devs. We need more people building. We're already number 1 for Web3 projects building on Bitcoin, but let's just solidify that place absolutely so that Stacks becomes the place to unlock Bitcoin. So anyways, let's jump into this conversation with Aki Bailo, CEO and co-founder of DLC.Link.
Welcome to Built on Bitcoin.
Aki, how you doing today, my friend?
Hey, great. Thanks for having me.
Glad to have you here. I'm excited for this one. I mean, for a lot of us stackers, we're waiting for that time when you could bring Bitcoin native, main chain into Stacks and use it in some smart ways. And you guys, LNSwap was kind of the first one where it's like, wow, it's like, this is what it looks like when you use Stacks as an invisible programming layer. And DLC.Link seems like that next big domino. So I'm excited to talk about what you guys are building. But before we get to what you guys are creating, I'd love to start with, it's a new question, so I don't know where it's going to go, but I'm curious, when was the last time you were an employee?
Yeah, it's funny because I feel like, although I'm a founder, this is my second company. I feel like, I report to our customers, our, employees, our VPs, the board. So I have so many managers. I've had more managers in one job now than I had before. But the last time I had a kind of a non-founding job was back in 2013. I reported to the CEO of a high-performance database company called InfinityDB, where we made kind of large deployments for very large analytical kind of workloads. Prior to that, I was at OpenView, where I was the first associate looking at big data and AI, doing Series B investments, kind of 5 to 20 million. And there I reported to George Roberts, who was one of the founding partners. So those were the last times I had one manager.
Fair enough. Okay. And, for my trajectory, I worked at a grocery store, but I was always hustling on the side. So I had an eBay business and car detailing and video production. Like I've done tons of things to try and find my my entrepreneurial niche, to like foster it myself. Were you doing that while you were working at a company, or did you go cold turkey and then become a founder?
Yeah, definitely. So I was born in Hungary, and my parents, when I was 5, my family moved to the US to kind of make kind of further ourselves in our careers and give us some, better tools. And so I was always an entrepreneur. I sold jokes when I was like 7 years old. I sold jokes for a nickel. I started a bunch of organizations in high school and college. I started a small business with 2 of my friends when I was 15. So yeah, I was always selling and hustling, and yeah, this is definitely the lifestyle for me.
Got it. Okay, that's very cool. And then when you decide to make the jump full time to being a founder and kind of losing that day-to-day paycheck security, what was that? What prompted that for you? Like, this is what I want to do right now.
Yeah, so basically, my first job out of college, I worked at a more entrepreneurial management consulting firm called Diamond, where there were 300 consultants, but we competed against McKinsey, BCG, Bain, and so we had to be, very kind of savvy and hustle. I got our 6 months in, I got us an engagement with Microsoft, which was the firm's first engagement over there. So that was pretty cool. That got me some exposure to some of the partners. But that was still just a regular job. And I started reading on entrepreneurship and VC. And that's when the lean startup stuff started coming out that, Trevor, I actually went to a course that Trevor held in Boston like over 10 years ago. But basically, I knew I wanted to do entrepreneurship or VC. So I left that job. I did a 5-month internship. And then I got the job at OpenView, but that was still a job. And I was hoping to stay in BC for a couple of years and kind of see different models and stuff. But Scott Maxwell, who founded OpenView, pulled me aside like 2 weeks into my job. He's like, I like you. He's like, I don't think you should be here. You should be building products. You're like a product person. Why don't you like explore that and come back to VC later? Once you have a couple of companies under your belt, you'll be, better investor too. And so that was kind of like, okay. And so I did that. I joined, but I wasn't ready to start my own. So I joined somebody else's for 2 years. And that gave me enough time to kind of vet some ideas. I knew I wanted to build an AI product that helps society in some way. So, I had kind of 2 years to kind of think through ideas. And then when InfinityB sort of like, there was just a natural time for us to part. And that's when I'm like, all right, I'm just going to, jump in both feet first. And it was scary first jumping from consulting to that like internship and then VC. That was like when I was leaving consulting, I didn't have that job lined up. I just knew I wanted to do something different or more. I actually took classes at night, LBO modeling classes, so financial modeling classes at night, and did a free internship during the day for 5 months, which was great experience. But it was scary because I didn't have a paycheck, and so that was like the first time I felt that kind of horror or the terror of when you're like you're used to getting a regular paycheck. It's like a heroin drip, and then you get off of that, and you're just like oh my God, and it is very scary. But that was the first time I felt it. And then when I jumped from InfinityB into my own thing, that was the second time I felt it. And, I guess when I jumped from my first startup to my second startup, I also felt it, to be completely honest, but it wasn't as bad because I had kind of gone through that before. Plus, like we had emigrated from the US from Hungary to the US with nothing. So that maybe that was my fourth jump like that.
Yeah, got it. Okay, very cool. And you mentioned it quickly, but you were saying, building some kind of AI tech company. I'd love to hear a little bit more about that. About what is your previous company that you built using AI?
Yeah, so basically, I did want to help society. So I thought AI was, force of good. It was very new. The business models were still unknown. I would argue they're still pretty new, still pretty unknown. But I wanted to do something that helps people. So I started in healthcare, spent 5 months kind of chasing after healthcare ideas. And some of my advisors were like, hey, look, like it's cool that you want to do this. Do not do this as your first one. Healthcare is super hard. The sales model is, not a meritocracy. Regulation will eat you up. Like, do something easier So I picked marketing tech, but I didn't want to do ads or things that are kind of interrupted, even though there's a lot of money in Facebook and whatever. I just didn't philosophically want to do that. So I picked content marketing because content is education. When you read a really good article, you learn something and you gain as a consumer. And then, of course, it pays the bills because it's marketing too. So I picked that. And essentially, I worked with the scientist, Richard Mala, and we invented a way to optimize content around topics. Because long story short, back then, all the SEO, the search engine optimization professionals were optimizing on specific keywords. And we were able to prove that if you actually make the article topically more relevant and you make the article more informative and cover more related concepts that relate to the term you're looking to rank on, that is the most important thing you can do. But there wasn't a way to do that. So we built an engine. I basically sat down for 2 years and built an engine that implemented a branch of science called topic modeling that would actually analyze your article and measure and quantify how well it covered a particular topic, show you where you had gaps, your content, and that would let the content writers, content editors basically improve the content, and it would rank better and it would be more informative. So it's sort of like a twofer. And so I built a company around it, raised 50 million, led that company for 8 years until a year and a half ago when I stepped back.
Okay. And you said you sat down for 2 years and built an engine. Are you technically minded or did you hire around that?
Yeah, I've been coding since I was 9. I mean, okay, I coded BASIC when I was 9, but at 13, I learned Perl, which was my first, actual language. At 15, I went to a community college for computer programming, learned C++ and kind of stuff like that. So yeah, I was definitely a dev, but I had stepped away from it for a few years, so I had to relearn. Like I had to learn Go or Scala and kind of the, high concurrency, network IO stuff and things to implement the system. But that was cool. And, it was a great experience. I wanted to learn it. I knew that if I learned it once, it would kind of stick in my brain. And there's engineering concepts have a way of translating to business anyway, in terms of optimizing resources and whatever. So yeah, I basically built it. And then Richard, who I have a co-author on the patent we have together, he was the scientist, just a raw, what algorithms are used to model content. And it was a really great, collaboration. And I forgot to mention, my dad was a scientist. And so part of my motivation was my dad would create basic research. He has 6 patents. And I always wanted to take basic research and apply it to a business problem, build a product and build a self-sustaining company that, makes revenues and can kind of live on its own, build that. So that was always my interest. So that's what I did with Market Muse. And that's what we're looking to do with DLC.Link.
Got it. Very cool. Okay. And it seems like you have you like to be at the bleeding edge in some sense, like using AI for content. That's very bleeding edge, especially back then. So I could see why someone would want to get into crypto then, where that's the new frontier now, Web3, all these things. What initially drew you to crypto? What did you find so fascinating about it?
Yeah, for crypto, it was a natural fit because I had been also doing stock market investing since I was 15. Now, I'm terrible. My track record is awful. It's embarrassingly bad. I think I'm a little too early. And I was in Tesla at $25 and I got out because it was too slow. So I need to learn to be patient and just let things play out, which is a good lesson in life anyway for people like me or dopamine addicts. But basically, crypto was great because it's fintech, but it's not fintech in the sense that we're not, fintech has traditionally been very hard. Hedge funds have a bunch of money, but they're terrible customers. They don't want to pay much. They're very frugal by nature. Big banks are super boring. I mean, tremendous, bureaucracy, all this regulation. So that's understandable. But, I never wanted to work at a big bank. But crypto is, both, it kind of takes the best of, just straight up dev, really interesting cryptographic dev, which is always was one of the most interesting parts of computer science anyway, is just security and privacy and all that stuff. Merges it with kind of crowdfunding, which was, a great vehicle for getting money if you're a startup, and then merges it with this kind of push-pull relationship to the financial system where it's like it's an alternative system, but it also needs to work within the existing system and make it better. And then just the raw talent and the community focused, it's one of those, like, there's so many people who are kind of, what's that term when you see the pie like growing, you're not like dividing up a pie, but you're, you're creating value, and it's just all of it kind of came together, plus enough kind of PR to just make, really, ideas kind of lift off. And so it just is where kind of I noticed that all the SEO Reddits were kind of really quiet, and a lot of the crypto Reddits were really happening. And I'm like, all right, well, hold on, this is actually great. But like I said, it's just something I also wanted to learn. I had been in finance. I had been in private equity. Like I really actually enjoyed finance too. And so like finance plus software in a way that really does help society, evolve and the world could be a better place. With a lot of these applications. So it just was a natural fit.
Totally. So did you get here via Bitcoin then? It was Bitcoin first, and then you kind of expanded outward?
To some extent, yeah. So last September, I started just, thinking through ideas. I met Jesse, my co-founder. I had already partnered with my other co-founder, Dan, who had been in crypto for about 6-7 years before me, and he had been in hedge funds all his life. So, he was very much like a quant, dev guy, great guy to partner with. And so we basically applied for a Chainlink grant because Dan was at Dan had sold the company to Chainlink. So Dan was the head of enterprise solutions at Chainlink. So through him, we got a referral. We applied to a Chainlink grant to build a Chainlink adapter to Bitcoin. We got that grant on December 23rd last year. The next day, Will saw it and reached out. I was like, hey, you guys should build this on Stacks. We're like, absolutely. And we had a call in January, and we've been here ever since. So definitely been a pretty quick ride, but that's kind of we came in through Chainlink. I had actually heard of Bitcoin in 2011. I didn't have the mental capacity to look into it deeper. And obviously I wish I would have, but that's okay. Now we'll just build the next layer on top of Bitcoin. Totally cool. Lots of opportunity, lots of upside on things that work.
That's such a crazy fast progression. And I was taking notes real quick, but who was your introduction to Stacks, you said?
Will.
Okay. Got it. Did he know about the Chainlink grant and then pull you in?
Yeah. So Chainlink, we got the grant. We actually got the grant, I think, in like November. And then we wrote an article that Chainlink posted on their blog and published on December 23rd and tweeted out. And Will, saw that tweet and responded to us. And I love it. So it's all Will. Will gets full credit for bringing us here.
Man, thank you, Will. We all appreciate it. Okay, very cool. Well, then let's jump in now because we've been dancing around all kinds of interesting topics. But what is DLC.Link? What are you guys building?
Yeah, so we're basically building a bridge that'll let stacked apps set up Bitcoin escrow contracts. So essentially, you gave us a lot of credit for helping enable native Bitcoin in applications. The easiest, or maybe the low-hanging fruit way to do that is to build escrow, where a user can go into an escrow with the smart contract, basically accept the deal and lock up their Bitcoin in self-custody, so in their Bitcoin wallet, and basically interact with the protocol behind the contract. And then when the smart contract, when they've kind of fulfilled whatever they need to do, the smart contract sends a signal and unlocks the escrow. So for example, if you take a loan, you put your collateral in your wallet, you get the loan, you get in this escrow, you get the loan from, Arcadico, you can do things with the loan, satisfy the repayments. If you default, then Arcadico's smart contract can kind of emit a signal and say, hey, you've defaulted, you lose your collateral. So that escrow goes to Arcadico. But if you satisfy the loan and everything goes great, then they send a signal saying, hey, you've satisfied the loan, unlock the escrow, and you get your collateral back. And so the great thing about that is that it's self-custodied. So you're not taking your Bitcoin and giving it to a lender like Celsius, and then Celsius does some whatever, with another protocol, and then it blows up, and now they're like reaching into, well, they don't even have to reach into your pocket. You've already given it to them. So then they like grab that, and then you get back a fraction. Like that doesn't happen because it's in your wallet. So it's in your custody. Nobody's managing your money in that sense. And the logic is just outlined in a smart contract. So if you want to audit the protocol and see exactly how it's going to work, you can just do that. And so it's very much a trust minimized system. So that's what we're enabling. And the way to do that, and I can obviously get into more on this, but the way to do that is the DLC is actually it's called a discrete log contract. It's a system where you essentially do it's like a 2 of 3 multi-sig wallet, where one of the parties is an independent oracle. So one of the parties is you, one of the parties is the smart contract, and the third party is the independent referee. And so we're building basically a network of oracles that can independently, verify the smart contract signal. So it's kind of like an independent network of referees for these types of escrow arrangements.
Interesting. Okay. So you gave an example of like Arcadico. I'd love to plug into like, what does that look like in one use case? So help me play it out. So I have Bitcoin on main chain, and I would send it to an address that is controlled by the service. So in this example, it might be like an Arcadico DLC swap, and I would lock it up. And then on Stack's side, it would unlock whatever I'm trying to get as the other asset.
You actually don't even have to send it. So if you have a DLC enabled Bitcoin wallet, and that's kind of the prerequisite, is your wallet has to support DLC signatures, which we're working with a couple to build it in. And I think a lot of wallets will support that in the future. But basically, you can actually just take your Bitcoin in your wallet and lock it up in your wallet by, there's like a flow where you sign an agreement with the smart contract on the other side. So there's an offer, and you accept the offer, you lock that Bitcoin, and it's in your wallet. It's just locked. And then basically later you unlock it, or later the smart contracts signal unlocks it, and then it's returned to you. So at the very end, there's only one transaction. There's an execution transaction, basically where the funds are sent. So the Bitcoin that is locked in your wallet is sent somewhere, or it's not sent, but there's just one actual transaction, Bitcoin transaction there. Everything prior to that is off-chain. And the reason, or the way this works, is it implements something that was added in Taproot called PTLCs. So it's basically a way to, which is kind of similar, or kind of an improvement upon HTLCs prior to that. But basically, it's just a way for there to be conditional payments that, and kind of payment logic that is only executed when it settles as the last step in the DLC close.
Okay. So I see some parallels to kind of how stacking works, where it stays in your wallet, but you can't spend those stacks. And then you get your yield in the future, depending on how the reward slots work out.
Yes.
So in this example, if you're taking out a USDA loan, for example, do you get the USDA wallet still locked in your wallet and you could go spend it? Or when does that Bitcoin transaction execute?
Yeah, if you put down Bitcoin collateral for USDA loan, the Bitcoin gets locked. The USDA is given to you by Arcadico. You do whatever you want with that. And then at the end, when you repay the loan, when you're looking to get the collateral back, that's when there's basically a transaction, which if the Bitcoin is just in your wallet, it doesn't have to go anywhere. But if you default, then the Bitcoin has to go to the protocol. Or if there's a partial liquidation, then part of it has to go. So then there's a sending transaction.
Got it. Okay. And I've been doing a little bit of research myself on like atomic swaps and catamaran swaps, and learning a little bit about HTLCs and how those work. Do discrete log contract, can they be used in a swap fashion, or is it more used for this kind of like escrow fashion, or can they be both?
It is related, but it is really I guess escrow is probably the best way to put it. There are some natural use cases where you might use a swap, but the DLC technology itself actually. So when I say escrow, that's kind of like the more kind of simplified articulation. The DLC actually refers to the oracle in the process publishing, kind of pre-signing a set of outcomes, and just so basically computing a set of potential outcomes and pre-signing it in a particular way. And when the contract settles, the winning party takes the oracle signature that corresponds to the outcome that actually happened. Like, let's say there's two outcomes, like you default or you don't default. The oracle publishes both pre-signatures, and Archidico basically just grabs the signature. Like if you do default, Archidico gets the funds. Archidico grabs a signature that's the default signature, and then they execute it and they grab the Bitcoin from your wallet. If you don't default, then your wallet will grab the signature that is the don't default, and then and then nothing is transferred there. So kind of the
Okay.
It works.
Okay, so again, I'm gonna double click to make sure that I get it, and maybe I can help some people. So the big benefit here is anything that you might have a middleman, which we could view as an escrow in some sense. So it could be a bank lending money, or it could be a title company giving a title to your house.
Yes.
Those things that the DLC oracle in some sense is you're removing the trusted third party and putting in code for most of the use cases where that would be the case, where instead of going to a title company or a bank, you just use code.
Yeah, and that's the very, very, very powerful business application of this is anywhere where you have a trusted third-party custodian, you can replace that with a network of trust minimized oracles that are the referees. So you can build an application where you can actually just have smart contracts all the way. And then the oracle is not just one custodian and their business process, but a whole bunch of oracles that listens to a smart contract where the smart contract presumably has been audited, has undergone a security audit. So you can replace the role of custodian with, or rather not completely replace. If everybody were to use DLCs, you would still have custodians, but the part of the process where the custodian has to, make a determination on whether you fulfilled your end of target, that is actually handled through a bunch of oracles, making that, listening to that system, making the determination versus like somebody in an office, like rubber stamping something or clicking a button.
Got it. Okay, that makes sense. So I could see use cases, lending makes sense. Title ownership, car, homes, that seems pretty clear. What are some other potential use cases that you've identified?
Yeah, a whole bunch. I mean, the basic ones, they're really basic, are things around like proof of reserve. So you can mint a stable coin or mint a non-custodial wrapped Bitcoin where there's, proof that that coin is backed by your reserve in people's wallets, and you don't have to, trust, Tether publish reports or whatever. So that's kind of a basic use case. Escrow is used anytime there's any kind of moving, transferring. So for example, Bitcoin miners can use DLCs when they're just in the mining process. There's different places where you have Bitcoin or you have, future Bitcoin that is to be paid out. And so you can put those in escrow to show the pool participants, hey, like this Bitcoin is here, it's unlocked. It's locked for us, but it is here. It's verifiable. So just kind of think like reporting, kind of proof of reserve like that. And then you get into the more interesting kind of lending, crowdfunding Bitcoin, and get a little bit of Bitcoin from everyone. And once you hit a hurdle rate, release the Bitcoin. If you don't, return it to the participants. Options. I mean, anything around derivatives, insurance. Options, they all require escrow because you have kind of an uncertain future. So you need a system of conditional payment. So you can really build this into pretty much, most of finance will need any kind of trading will need it too.
Got it, man. That is super, super exciting. I'm hyped right now. Okay, I'd love to take a slight-ish left turn. Stacks has this goal of trying to unlock Bitcoin, and ideally it sounds like if this new Munib, Stacks would mostly be invisible. Like it's a gas token. So you wouldn't ideally spend Stacks to buy NFTs in a perfect Stacks world. You would just use Bitcoin and it would just plug in and then go to your Hero wallet. And maybe now hearing that you're somewhat new to the ecosystem, maybe you don't know, but I'm curious from your perspective, how close are we to having all the tools we need once they get fully fleshed out to build that like Stacks is invisible? Like DLCs sound interesting. Lightning integration is coming, already here. I guess Stacks 2.1 has some more integrations with Clarity. Like, do we have all the tools, or what's your take on that?
Yeah, it feels to me, as kind of an outsider, feels to me that we are pretty close, but it is on an application by application basis. So it's up on anyone who builds any startup, crypto or otherwise. You have to, create a positive user experience. It has to be easy to use. And so it is just, it's something that needs to be built in. So for example, when we first came to Stacks, the first part of our foundation funded work was to build a Chainlink, to finish a Chainlink integration into Stacks, which is done and live on testnet. And we're still kind of in this long process to get it approved by Chainlink to make it production ready. And I can't speculate on that because that is, famously slow. But in order to implement that, we had the same problem. Like, how do you pay the Link token, to run the oracles if you're in Stacks? So we created a Stacks Link faucet to do that conversion, but that's just something that we as an engineering team, did. And so every Stacks team basically can, comes up with that problem and people have kind of gotten around it, which is, I guess it's fine to use, wrap Bitcoin and XBTC and whatever. And there's kind of some building on top of that. But because it is hard to kind of do some of these things from an engineering standpoint, but it kind of behooves everyone to build their app in a seamless way as possible. And I'm guessing for most of the app developers here, that means just taking Bitcoin and doing things with Bitcoin and doing that. But that's really that's like a usability thing as well. We're not the full solution that enables every type of basically the biggest limitation that DLCs have, and it's more of a feature than a bug, but the biggest limitation is that the parties need to be known right up front. So when you open a DLC, the parties have to be there. So you can't have other parties like come in later. And if you do that, you have to close the DLC and open a new one, or you have to transfer the DLC, which is an interesting area, but there's some engineering things that need to be built up to make that possible. So like maybe one day DLCs will, apply to most use cases, but right now you have to kind of build it in a way that corresponds with the DLC flow. And so what we've been doing just to, be helpful in that tactically is anytime anyone at Stacks wants to build an app using DLCs, we just partner with them and we kind of outline the flow and we have kind of like a shared vision document and we just get into it. And that's been working really well because in doing that, there's always like some business kind of logic questions that come up, which is different for every app. But long story short, it is possible. We're seeing some of that in the prototyping kind of phase. I don't have a lot of like working examples I can share yet, but I think through the year we're going to get some more. And especially, so our goal is to have a wallet, Bitcoin wallet with DLC support out in July. And Arcadico is kind of, the forerunner right now. But although there are a couple of companies in the pre-accelerator that might also be, pretty quick. Or Wilson at Block Survey. So we're going to see which team gets there first, but one of these teams should have like a working prototype in July at some point, which would be really awesome.
Very cool. Okay, my next question was going to be about roadmap and what's next. So you answered that. You segued in perfectly. But okay, I got a couple more questions. I mean, a half hour flew by like I expected. Last two questions. You were part of the Stacks Accelerator, cohort 2. demo day just happened. I'm curious, how has your experience been in the accelerator?
It was awesome. I mean, when the way that came about was really fun. We went to the Miami Bitcoin conference, went to the Stacks days, and Trevor kind of pulled us aside, and Trevor and Kyle were like, "Hey, you guys should be in the accelerator like right now. It just started 3 weeks ago. Don't worry about it. Just jump right in." And I mean, my pitch was very technical and very kind of jargon heavy. And Trevor especially spent so much time with me refining the pitch and just making it more easy to understand, and the visuals, and giving us so much feedback. And Kevin over there and just the whole system. Andrea, we were pitching VCs like every day and pitching each other. And so all of that kind of iterative practice really helped, just make the pitch way easier to understand. And so, yeah, that was by far the biggest, value, is just being able to tell that story in a more simple manner. I mean, I was even a little more technical in this call than I would normally because of the audience here. But, if we can kind of, the usability, argument applies to fundraising as well and sales. If you can just make it really easy for people to like see the value and see kind of what's in it for them from this new technology, which otherwise is fairly complex and have a lot of moving pieces. But if you could just kind of like quickly articulate the pitch in like a 30-second, elevator pitch, that's huge. So that's what we're trying to do. And the accelerator really helped, refine the pitch to get it there.
Totally. Yeah. But being on the Stacks Ventures team myself, I see like the small tweaks you guys make week after week after week. It's like that's what gets it over the hump. But I was curious about how this call was going to go too, because I mean, you've been pitching for months now and just going hard. So I was like, is he going to be tired of talking about DLC.Link, or how's it going to go? But the passion's clearly there.
Oh man, I'm more energized than ever. Last week we did a hackathon, a 3-day hackathon with Albert and the pre-accelerator team. And we had 6 companies come out. Literally every company that participated came out of it with an idea that could be a viable business model. Some of them were really unique too. And I'm not the authority on this, but this feels like it's ready for the accelerator itself. So it was really cool. And the best part of this job is every day we see new use cases, new ways people are using this kind of escrow concept to build new business models. And just, in crypto, one of the problems I've kind of noticed over the, year and change that I've been here is there's a lot of excitement, but some of the, ideas are better than others. Some of them are more kind of standalone business, some of them hold more water than others. And especially investors are kind of probably pretty fatigued at looking at stuff that is not going to turn into a business, or it's just more kind of like an idea. And here we have a really compelling pitch at Stacks is, hey, the thing that was built on ETH or wherever, build it on Bitcoin, because this is the safest way to do it. It's the only decentralized, system, blah, blah, blah. It's clearly held up in a time of crisis over and over. It's the longest. This is the safest way to implement any technology. Take that awesome idea that's worked elsewhere, build it on this, and it'll actually be structurally more sound. And, you can actually enable that using DLCs. Like that gets me up, at 5 a.m. every morning. Like I can't wait to jump in and learn like what's today going to teach us.
Totally. I love that, man. I'm already like, I'm sold on Stacks. I've been here a while, but you got me like re-energized just hearing that last little minute. So that's perfect. Last question from me. I like to end on this like high note, so imagine you've been executing for 3 years. You guys have crushed it. Stacks is number 2 or 3. It's either right behind Bitcoin or right behind Ethereum. What does DLC look like in that world?
Yeah, I mean, our long-term goal is to connect all of the chains to Bitcoin. So we want to connect, obviously Stacks it's sort of more of a forerunner in that because of just the goal here. But ETH also has wrapped Bitcoin, and there could be some native Bitcoin on ETH that is, more secure. All of the other chains could benefit from, more connectivity to Bitcoin. Chainlink certainly can. They're really interested in that as a goal. So, we just want to enable Bitcoin to be used in all the places. And then at the same time, that's kind of like what we're able to, directly influence. And at the same time, I think more countries are going to adopt Bitcoin. More big companies are going to have it in their reserves. More people are going to have it in their reserves. And just by that, then the next question is like, how do I get a yield on this? How do I use this for DeFi? Obviously they're going to want to do things with it. And so I think the world will also evolve, and we're just going to see a lot more security, a lot less hacking, a lot less kind of human error, and a lot more smart contracts programmatically doing things that, are just going to be auditable and verifiable and kind of reduce risk. So I think we're going to get closer to decentralized financial system, over the coming years with this stuff.
Got it. I love it. Cool. This has been a fascinating conversation. Is there any closing thoughts or things I didn't touch on?
Oh, nothing. Just if you need to find us, there's a channel in Stacks Discord, #DLC. Find us there. We're trying to monitor that all the time. You can also ping us via our ad handles. I'm aki.dlc. So you can find me there. And yeah, if you've got a project or interest in learning more, please reach out to me or my colleagues. We'd love to talk through it with you. And then if there's any other kind of networks or any kind of outside of Stacks, anything that you think would benefit from this or getting better connectivity to Stacks and Bitcoin via this, love to explore all ideas. So please just any idea, ping us and we can explore it together.
Fantastic. And I'll have all the description stuff, all the info down below for anybody watching and listening. But man, Aki, thank you so much for taking the time today.
Thanks, Jake. Pleasure was mine.
Welcome to Built on Bitcoin.
I know that things don't always go your way, but I'll be right here waiting. I've been waiting now. I've been trying to figure out a way to make it out, cause I don't think about